Whether you're trying to improve your credit score for the first time or you're looking for ways to boost it even higher, this video is for you. Let's get started on the path to a better credit score together. Tip 1. Pay your bills on time. This may seem like a no-brainer, but you'd be surprised at how many people miss payments. Late payments can have a big impact on your credit score, so it's important to make sure you're paying all of your bills on time. We know that life can be unpredictable, and sometimes things come up that make it difficult to pay your bills on time. Maybe you had an unexpected medical expense or you had to take time off work. Whatever the reason, don't beat yourself up over it. The important thing is to take action and get back on track as soon as possible. One strategy to consider is setting up automatic payments for your bills. This way, you'll never have to worry about missing a payment again. Most companies offer this service and it's easy to set up. You can also set reminders on your calendar or in your phone to pay bills on time. Another tip is to make sure you have a budget in place. By having a budget, you can plan for expenses and make sure you have enough money to pay your bills on time. It's also important to prioritize your bills and make sure you're paying the most important ones first. In the end, paying your bills on time is essential for maintaining a good credit score. It may seem like a small step, but it can have a big impact on your financial future. Remember, consistency is key, so make paying your bills on time a habit and you'll be on your way to a better credit score in no time. Tip 2. Keep your credit card balances low. This is another important factor that can have a big impact on your credit score. Your credit score is partly determined by your credit utilization, which is the amount of credit you're using compared to the amount of credit you're using compared to the amount of credit you have available. It's important to keep your credit card balances low because it shows lenders that you're not overextending yourself and you're able to manage your credit responsibly. A general rule of thumb is to keep your credit card balances below 30 of your credit limits, below 30 of your credit limit. So, if your credit limit is $1,000, try to keep your balance below $300. We know that it's easy to get caught up in the moment and use your credit card for impulse purchases, but it's important to be mindful of your spending. One strategy is to only use your credit card for essentials and pay off the balance in full each month. This way, you'll never have to worry about high balances and you'll be on your way to a better credit score. Another strategy is to transfer your balances to a card with a lower interest rate. This can help you save money on interest charges and pay off your balances faster. Just make sure to read the fine print and understand any fees associated with balance transferred. In the end, keeping your credit card balances low is essential for maintaining a good credit score. It's not always easy, but it's worth it in the long run. By being mindful of your spending and keeping your balances low, you'll be on your way to a better credit score and more financial freedom. Tip 3. Don't close old credit accounts. This tip may seem counterintuitive, but it's actually important to keep your old credit accounts open. The length of your credit history is one of the factors that affects your credit score. When you close an old credit account, it can shorten your credit history and make it look like you don't have as much experience managing credit. This can negatively affect your credit score. Even if you're not using an old credit account, it's better to keep it open and just put it away than to close it. Another reason to keep your old credit accounts open is that they can also help to improve your credit utilization. As mentioned before, credit utilization is the amount of credit you're using compared to the amount of credit available to you. If you have an old credit card with a high limit, it can help to lower your credit utilization. But what should you do if you have an old credit account that you're not using anymore? One option is to make a small purchase on the account every few months and pay it off in full. This will help to keep the account active and may also help to improve your credit score. In conclusion, don't close old credit accounts because keeping them open can help to improve your credit score. The length of your credit history is an important factor that can affect your credit score, so it's better to keep an old account open than to close it. Just make sure you're not overusing credit and pay your bills on time to maintain a good credit score. Tip 4. Dispute errors on your credit report. This tip may not be the most exciting, but it's important to check your credit report regularly and dispute any errors you find. Your credit report is like a snapshot of your financial history, and it's used to determine your credit score. Unfortunately, credit reporting agencies are not perfect and errors can happen. Maybe there's an account on your credit report that doesn't belong to you or a late payment that's been reported incorrectly. Whatever the error may be, it's important to dispute it as soon as you find it. Disputing errors on your credit report is not as difficult as it may seem. and it's a process that you can do yourself. You can request a copy of your credit report from one of the 3 major credit reporting agencies: Experian, Equifax, and TransUnion. Once you have your credit report, you can review it for errors and dispute any you find. To dispute an error, you'll need to write a letter to the credit reporting agency. In the letter, you'll need to provide evidence of the error and explain why it's inaccurate. The credit reporting agency will then investigate the dispute and remove the error if they find it to be valid. It's important to note that the process of disputing errors on your credit report can take some time, so be patient and don't give up. It's worth it to take the time to dispute errors on your credit report, as it can significantly improve your credit score. In summary, checking your credit report regularly and disputing errors that you find is an important step in maintaining a good credit score. You can do it yourself, and it's worth the effort. With a little bit of work, you can improve your credit score and ensure that the information on your credit report is accurate. Tip 5. Limit new credit applications. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. This tip may seem simple, but it's important to be mindful of how many new credit applications you're making. Every time you apply for credit, it generates a hard inquiry on your credit report. Hard inquiries can negatively impact your credit score. When a lender sees multiple hard inquiries on your credit report, it can make you look like you're desperate for credit, and it can raise red flags. It's important to note that not all inquiries are equal. Applying for a mortgage will have a lesser impact on your credit score than applying for multiple credit cards. So, how can you limit new credit applications? One strategy is to only apply for credit when you really need it. For example, only apply for a credit card when you need to make a big purchase or when you're planning to travel. Another tip is to rate shop for a loan, such as a mortgage, within a short period of time. This way, multiple inquiries will be treated as a single inquiry. It's also important to remember that having no credit is not always the best strategy. Lenders want to see that you can handle credit responsibly and pay it off on time. So use your credit, but make sure you pay it off on time and limit new credit application. In conclusion, limiting new credit applications is an important step in maintaining a good credit score. Be mindful of how many new credit applications you're making and only apply for credit when you really need it. By being mindful of your credit applications, you can avoid unnecessary hard inquiries and maintain a good credit score. Tip 6. Keep an eye on your credit report. This tip may seem like a no-brainer, but it's important to check your credit report regularly and make sure the information is accurate. Your credit report is like a snapshot of your financial history, and it's used to determine your credit score. Checking your credit report regularly can help you catch errors or fraudulent activity early on, and it's a good way to keep track of your credit score. You can request a free copy of your credit report from one of the 3 major credit reporting agencies: Experian, Equifax, and TransUnion. By reviewing your credit report, you can also identify areas where you need to improve. Maybe you're carrying too much credit card debt or you have a high credit utilization ratio. By identifying these areas, you can take steps to improve your credit score. It's important to note that credit reports can change frequently, so it's a good idea to check your credit report at least once a year or even more often if you're trying to improve your credit score. In conclusion, keeping an eye on your credit report is an essential step in maintaining a good credit score. You can request a free copy of your credit report from one of the 3 major credit reporting agencies, and by regularly reviewing it, you can catch errors, detect fraudulent activity, and identify areas where you need to improve. Remember, knowledge is power, so take the time to review your credit report and stay informed about your credit score. Tip 7. Use a secured credit card. This tip is for people who are just starting to build their credit or for those who have had credit problems in the past. A secured credit card is a type of credit card that requires a cash deposit as collateral. The deposit serves as a guarantee to the lender that you'll pay your bill on time. The benefit of a secured credit card is that it's easier to get approved for than a traditional credit card. This is because the lender has less risk since you put down a deposit, and by using a secured credit card responsibly, you'll be able to build a positive credit history and improve your credit score. When you use a secured credit card, make sure to use it responsibly. This means making your payments on time, keeping your balance low, and not applying for too many credit cards at once. These are all habits that will help you improve your credit score. Another tip is to look for a secured credit card that reports to all three credit bureaus, Experian, Equifax, and TransUnion. This way, your good credit behavior will be reported to all credit bureaus and will help to improve your credit score. It's important to keep in mind that a secured credit card is not a permanent solution. It's a stepping stone to a better credit score, and eventually, you may be able to qualify for a traditional unsecured credit card. In conclusion, using a secured credit card is a great way to build or rebuild your credit. It's a low-risk option for lenders, and by using it responsibly, you'll be able to improve your credit score and eventually qualify for a traditional unsecured credit card. Remember, the goal is to use a secured credit card as a tool to build a positive credit history and take control of your financial future.